Hello everyone, welcome back. Today is the day that I will release chapter 6 to you guys. As you guys can see, there is no slideshow today. No slideshow needed. Why is that the case? Simply because every single lecture, chapter 1 through 5, is everything that you will need to know to master the markets. It is one thing to learn the theory, and it is another to apply it to the charts. In this video, this chapter, I will start to introduce different ways of how you can apply the theory to the charts. You have learned everything that you need to know in the previous chapters, from market profiles to key levels, how you can define the key level, where you can find them, what makes a key level, etc. We learned about different CRTs, where they form, how they look like. We learned how to enter those CRTs. We learned about many different models. We learned about time and time frame alignments, and so much more. In this video, this lecture, I will start to explain a top-down approach to how you can analyze the markets to find the directional order flow, the draw on liquidity, and so on. How you can actually profile the markets. I will show you how to get your weekly analysis as well. And of course, leading to this point right here, the weekly analysis will be part of chapter 6. This goes for the week of September 22nd, which is today. Without wasting any more of your time, let's dive straight into chapter 6. So as you guys already know, the markets are either ranging or trending. And what is a trend? Very important. Trending markets mean that we are breaking above highs and rejecting lows. Breaking highs, rejecting lows. Now, in a bearish scenario, we are breaking lows, rejecting highs, breaking lows, rejecting highs. Now, where would we reject highs? Within bearish PD arrays. Where are we rejecting lows? Within bullish PD arrays. Now, of course, in a ranging market, price is simply moving sideways. With this in mind, you need to understand that there is different ways that you can analyze an expansion, which is the trending market, and different ways you can analyze a range. For example, if there is a key level and a range above the key level, what should happen next? So basically, pause the video, explain to me what's going to happen next. This is your key level, this is the range, and price basically traveled like this. Okay? Key level, range. Here's the answer. There is only two possibilities. A manipulation event into the key level, or sorry, that is option number 2. Option number 1, of course, is a retracement. All right, so we have a potential manipulation. How does a manipulation look like? Traveling down to the key level, back up into the key level, manipulating back up above the high that broke the low, CSD, order block entry, breaker, OTE, and so on and so forth. So that's the basics of a range manipulation expansion movement. So we have the range occurring right here, the manipulation occurring right here. As soon as we hit the key level, we can now anticipate an expansion. Expansion where? To the midpoint and then the high of this range. All right. Now, what happens if instead of a manipulation event, we get a retracement? Well, first off, in that case, you will see something like this. Give me 1 second here. Let's remove this. In the situation where we would anticipate the retracement, we would see something like this. All right, so we have a retracement here, rejecting the high into a bearish PD array. So let's say the 0.5 of the range and a bearish PD array, turtle souping a high, retracing into this array. We do not go short, we wait for the key level to be hit. As soon as price hits the key level, you do not expect a manipulation event like so. What do you expect instead? An immediate reversal. All right. So in the case of a retracement and then expansion back down into the key level, you expect an immediate reversal. In the case of a manipulation event, you expect a reversal right after the manipulation. So let me just repeat that. I think I confused you guys. If price is ranging and then manipulates the key level, price will then reverse. If price is ranging and then retraces into a bearish PD array before hitting a key level, price will then expand into that key level. As soon as the key level is touched and the price expanded and closed into the key level, you can now expect an immediate reversal. All right, that's the basics of the ranging market above a key level. Now I want to talk about a different market profile. What else can transpire? So we know, as we know from chapter 1, prices are going to range, take out a low, expand, right? And then continue to range. Before doing what? If there is a key level above price, price will range below the key level, manipulate the high of the key level, and expand lower. Targeting what? The midpoint of the range and then the opposing end of the range. Very straightforward, very simple. This is exactly what I showed in the previous example, a range below a key level. We expand, price stops the expansion and starts to range. Where are we ranging? Below a key level. Price will then only do one of two things. Sorry, one of three things. Price will manipulate that high and start to expand lower. Or price will manipulate a low, expand into the high, and reverse, immediately reverse back down. All right, in the opposing direction, you can see something like this form. A range, expansion downwards, key level right below us, ranging above the key level, retracement above a high into a bearish PD array, smacking down into the key level, closing into the key level. This is the expansion. And of course, breaking back higher with the reversal. So, very simple, very straightforward. I know this is just drawing. We will look at the charts. Do not worry. All right. After a range comes the expansion. After an expansion can either come a retracement or a reversal. So let's take a look at another example. We have the range. We have an expansion. Now what's going to come next? After the expansion, we can either see a range or we can see a complete reversal. Or we can see a retracement. What does a retracement look like? Something like this. Taking out a low into a bullish PD array. Likely there will be a key level as well right here. Tapping prices and reversing prices higher. Expanding prices off of the bullish PD array after turtle souping a low. We know that within a CRT, there is, sorry about that, there is, we have the high and low of the CRT. We have the first candle forming the range high and low. The second candle turtle souping with the low. And the next candles will be doing what? So we have the turtle soup of the low. We will then have the order block entry, CSD, right? Close above the down close candle, the thick down close candle that tapped into liquidity. That is the order block. Order block entry long. What is next? We will have the OTE or breaker entry. After that, we will likely have a kiss of death, which is the last turtle soup before the DOL is hit, before the opposing end of the range is hit. Right? So knowing this and applying the market profiles to this sequence right here. So what is this sequence? We have the OB entry. Let me just make this smaller. We have the OB. We have the breaker block or OTE. Sometimes it can be both. And then we have the kiss of death, the KOD. There is 3 sequences within the sequence, of course. There's 3 different things to be looking for. Firstly, this, of course, is going to be the CRT high and CRT low. And this pattern will form all the time. You will always see this form. Okay? Now, there's more things to look into. If we expand into a key level, so for example, let's draw a key level here. Pretend this is an order block. If price is ranging up here and decides to expand into the key level, right? We close into the key level. We do not wick the key level. We do not start ranging below a key level. No. Okay? We wick and close below the key level. What should you expect? Okay? After an expansion, what is going to happen? There is only 2 scenarios that will happen here. Price will either immediately reverse or price will retrace. Both of which provide enough of a move to allow you to enter the trade. So if you see this on the higher time frame, you can enter even if there is a retracement and not a reversal. So number 1, we have the reversal. Sorry about my handwriting here, not used to drawing. Reversal and the retracement. Let's just put the retracement as RET for retracement. Okay. So first example is the reversal. So what would happen here? We would simply reverse up, form the order block, tap the order block, OTE breaker, and kiss of death. All right. That's exactly what a reversal would look like. So we have the range, expansion into a key level, closing into the key level, and then we have an immediate reversal back up. Option number 2 is a retracement. A retracement will look something like this, above the key level, into an old high, a bearish PD array, and expansion back down. All right, how would you profit on this move? The same way you would profit on the reversal. Simple. This is the higher time frame. So before we get into that, expansion downwards, retracement into a bearish PD array, and after a retracement will always come an expansion. Okay? Catching this turtle soup is a high probability trade. Sorry about that, slight interruption right there. Getting back into the lesson here, price will retrace instead of reverse, and this is the higher time frame. A retracement on the higher time frame is an expansion on the lower time frame. That's why I said you can catch a trade over here. Price expands into the key level. What did you learn here? What must happen? Price must then move back up. That means you will be looking for longs. This is not a random area to look for longs. We have the narrative that we found out beforehand using our market profiles to analyze price. What are you going to do when price hits this key level and closes below? You look for a bullish CRT, enter the trade on the lower time frame, and target either the high of the CRT, of course, or the first swing high before the key level was hit. All right, so that's an important lesson right there as well. Let's talk about key levels, actually, since we're on this topic here. There are many different key levels, and the hierarchy of key levels, how can I say this? There are some key levels that are more important than others. All right? And I will explain them to you right here. So our first key level that I love to talk about is the order block. Let's just put this in black here. We have the order block. Now this is indeed an order. So we have the order block and we have highs and lows. Highs and lows. These two key levels are the most important key levels that you can ever use. Now, of course, there is a lot more key levels that you can use, such as a fair value gap, a breaker block, a mitigation block, a rejection block, and so on. If you want to learn all of those key levels, you can go watch ICT's core content. The important thing to understand is you do not need to learn all of it. And in fact, in my general opinion, I think you will get more confused trying to learn all of the different PD arrays. Focus on order blocks, highs and lows, and a third one would be a fair value gap, which is basically an imbalance in price. A fair value gap is something like this, where you can see a gap between three candlesticks. So candlestick number one, gap right here, candlestick number three. That's a fair value gap. So order blocks are the most important key level. Second, we have highs and lows. And third, we have the fair value gaps. Now, besides an order block, high and low, and FVG, what else do we have? What else is there that relates to an order block? So for this, I'm going to do 1.1. And what are we going to say? A breaker block. So what is a breaker block? A breaker is the high. So in a bullish scenario, it's the last high that rejected the low, which would be something like this. Let me get high, low. Actually, sorry about that. high, low, breaking the high. This right here is the order block. Tapping into the order block, expanding up higher. So now why is this, sorry, not the order block, the breaker block. Why is this a breaker block? Because price took out a low right here, turtle soup. This is the turtle soup taking out liquidity, rejecting a low and breaking through the high that rejected the low. This becomes a breaker. So where is the breaker in this scenario? Right here. This is a 4-hour time frame, of course. Where is the breaker? I'm going to expose it right here, so pause your video if you don't want me to tell you. The breaker is right over here. Now, why is this a breaker? I'll show you right here. Price took out a low into an order block, a bullish PD array, taking out a low, turtle souping the low, breaking the high that turtle souped the low. As soon as price closes above this up close candle, you now confirm the bullish breaker block, and you could have used it as your launch pad entry right here, targeting higher prices. Okay, that is a breaker block in a nutshell. So that is the hierarchy of key levels. Let me see if, okay. That is the hierarchy of key levels and how to actually use them. So number 1, look for order blocks. Number 2, look for breaker blocks. Number 3, look for highs and lows. And number 4, look for fair value gaps. All right. Now, when using key levels, you must apply market profiles to the key levels. You cannot use a key level by itself. You need to have a market profile in mind before the key level is even hit. All right. Now, what does that mean? That means if price, like I was explaining before, if price expands into a key level, you need to know what will happen next, or at least anticipate what will likely happen next. Is it going to be an expansion? Is it going to be a reversal? Is it going to be a retracement? Now, same concept here. If price is retracing right above a key level, you need to know what will happen next. The answer is price will expand into that key level and then cause a reversal. If price is ranging above the key level, price will manipulate into the key level and expand off of that key level after manipulation, of course. Now you can also have a range at a key level. Now in this scenario, you will not partake in any price action. What will likely happen after a range hitting a key level is a turtle soup of any direction, either the high or low of that range. Look for the change in state of delivery and target the opposing end of that range. Okay, because you never know what will come after. After a range will always come expansion. We just don't know the direction, especially if we are ranging at a key level. We can either break that key level, continue expanding upwards if we are bullish, or we can range at that key level, manipulate a high. Right after a range comes manipulation. Manipulate the high of that range and then expand lower. That's why you need to be very careful, and you should only be trading expansions and reversals, not the range and not the retracement or manipulation. Now there's a lot that I am explaining right here, but very, very important to understand. If we have an expansion without a key level, so expansion is E. Actually, you know what? Let's use the text. So if we have an expansion without a key level. KL stands for key level. If we have an expansion without a key level, what will happen next? Or should we trade this? First off, no. The answer is no trade, all in capitals. Why? Why is this a no trade type of scenario? What will happen after an expansion without a key level? Meaning, what will happen after price expands up? I just explained it. You guys should know. The answer is a range or a retracement. Okay? A range or a retracement. Let's make this smaller. 14. Actually, 20. We have a range or retracement, and like I said, you should only be focusing on trading an expansion or reversal. Now, what happens if we have the expansion plus a key level? So this time there is indeed a key level. What happens here? So in this scenario, we can draw a key level. Price expands into the key level. What happens? Recognize the fact how I just explained this literally 5 minutes ago. There's a reason I wanted you guys to get the information, and now I am testing you. If you don't know, it means you need to rewatch this lecture. Now, what happens next is very, very simple. There's only two things that will happen. Both outcomes have one direction where price is headed. A reversal or a retracement. Okay? That means price will come down, either as a retracement and then come up, or as a complete reversal, CSD breaking the low, not rejecting it, and continuing downwards. Okay? What does that mean? That means you can trade this range. Okay, so we have a reversal. Like I said, so we're getting a bit of lag here, but that is okay. We will deal with it. Reversal means trade. Now, expansion, no key level, we don't take the trade. Why? Because price will range or retrace. Expansion plus a key level, we take the trade because there is a high probability that price will reverse. And if it doesn't reverse, it will simply retrace down. But we know that the direction is either down if we are bearish or up if we are bullish. Now, what happens if price ranges and doesn't have a key level, plus no key level? What happens next? Manipulation. Now, for the more advanced students, you can indeed trade this. For the newer ones, I would highly recommend not trading this. Very important. Okay? No trade. Now, what does this mean? Exactly like I explained before. No key level. However, let's say there was a key level. Manipulation up, right? Sorry about that interruption. So as I was saying, price is going to range, manipulate, and expand. Now, this is with a key level. And if price is ranging above it, what happens if price is simply ranging after an expansion? So we have the expansion right here and the range right here. What will happen next? A manipulation. We do not trade this as beginners. Why? Because price can either manipulate the high, expand lower, or it can manipulate the low and expand higher. For the more advanced students, you guys understand and can take your trades here. For the beginners, you should not be executing any trades here. Now this is going to be interesting for some of you guys. What happens when we range and there is a key level? What's going to happen next? So what does this mean? This means if price is ranging below the key level, not before hitting it, but below the key level, what's going to happen? Expansion. Do you guys trade this? The answer is yes. Okay, so what would this look like? Something like this: key level, price ranges up here, expands into the key level, creates a range. Now, where is price ranging? Price is ranging inside of the key level. What does this mean? We do not need to manipulate a low in order to expand. Why? Because we are already in liquidity. That means price will expand upwards. Very straightforward, very simple. Now, there are more scenarios that I want to talk about, such as reversals and key levels, retracements in key levels. What will happen next? So, bear with me here. If we have a reversal with no key level, what will happen? No key level. Then we will likely see a retracement. This is a no trade zone for the beginners. Okay? When I'm talking about no trading, it means the beginners should not be trading. RET stands for retracement. Let me just write retracement to not confuse anyone. Reversal plus no key level equals a retracement. Now, what happens when there is a reversal plus a key level? You guys are going to be surprised, but this is a no trade zone as well. We must avoid this, and the advanced students might enjoy this more, but for the beginners, avoid it. A range. No trade zone. So, this means we have a key level, two key levels here. Sorry about that. We have two key levels. Price expands. So let's say we have expansion downwards, a range, retracement, tapping into, after a retracement, expansion into the key level here, reversal, tapping a key level. What's likely going to happen here? A range. Okay? Now, moving on to the next possible scenario, we're going to have a manipulation. Manipulation without a key level or with a key level. No matter what, there will always be an expansion followed by manipulation, regardless if there is a key level or not. And this, of course, you can indeed trade. Okay, so these are your market profiles. Write this down, keep that next to you when you're trading, study it, look for them on your charts. For the intraday traders, you're going to use the 4-hour time frame to locate your key levels and the 15-minute time frame to profile the market. Are we ranging, expanding, retracing, or reversing, or ranging, if I said that. And if you're a scalper, you're going to use the 15-minute for your key levels and the 1 minute for your market profiles. Higher time frames, you can use the 1 hour as your key level and the 5 minute for your market profiling. You can use a daily for a key level and the 1 hour for market profiling. All right. I think that's going to be it here for profiles and how you can actually use them in the markets. The next chapter is going to explain something about ranges, not not necessarily doing having to do with IPTA data ranges and all of that. However, I will be diving into a dealing range, what makes a dealing range, what validates a dealing range, how to use the dealing range to your advantage, and how to find valid key levels within the dealing range, because not every single key level is in fact valid. All right, so starting on ES here, taking a look at the monthly time frame. Let's go ahead and remove all drawings. On the monthly chart, what do we see? What is price doing according to our profiles? Well, first off, we are breaking highs, rejecting lows. We are bullish, in a bullish trend. Price is expanding up after retracing right here. What is this? This right here is a bullish order block. Why is this a bullish order block? Because we tapped into a fair value gap. We filled the liquidity, generating new liquidity within this order block, closing above the order block right here, tapping into it and reversing back up after retracing into it. So we are expanding back up. Logical framework used on the monthly time frame, we are bullish. Dropping down to a weekly. We'll actually draw this order block. I want to show you something here. You can do this yourselves. This is, write this down actually, very important. We have a monthly order block over here. How can you find a lower entry, a better entry to get long? You drop down to a weekly. Refine the key level. How do you do this? Notice how this is the thick down close candle that aligns with this low. We will turtle soup the low, hitting a key level, enter long, targeting the opposing end. So opposing end of what? Of this range. So we refined the key level here. Now we're going to take a look at the profiles on the weekly time frame. Price is breaking higher, retracing, expanding, retracing, and expanding back up. As you can see, we were expanding and we retraced into this fair value gap. What happened here? We filled the fair value gap, generated liquidity within this candle right here, and we engulfed it. What does that mean? That means a close above with last week's candle. What does this mean? I just explained this on the monthly time frame for this candle. On the weekly time frame, that means this is an order block. Okay? You draw the high of this candle, extend it. What do you expect to happen with next week? Retracement into the order block, expansion upwards. Very, very straightforward and simple. Okay? You have to understand that we are indeed at a key level here. What key level are we at? At this monthly high. If you go on the monthly time frame, you would recognize it is a monthly high. This used to be the previous all-time highs. We broke that last week on ES, and Q did not. However, after expanding into a key level, right, dropping down to a daily time frame, you can see this is an expansion into a key level. What do you expect to happen? You expect price to reverse or to retrace, both leading to the downside. So what is your job? Tomorrow, look for entries to get bearish, to get short, tapping this key level. Once price hits this key level, you want to see how it will react and how it will push prices back up. Now, is this a key level that's going to be respected? So drop back on the weekly time frame. Is price going to come down, trace into the key level? I don't know what's happening right now. Lagging. All right. Is price going to come down into the key level, respect it right away and reverse right away up? A possibility, but not likely. So what do I expect to happen? On a daily time frame, we can clearly see we have relative equal lows right here. On the 4 hour, it is even more visible. I do expect these lows to be taken out. So we have these lows that are the next target for the downside. Sorry about that. So what I'm doing right here is basically refining this key level, dragging this all the way down to here. Why am I dragging this down to here? First off, on the daily time frame, we filled a fair value gap and formed another order block. This is on the daily. We have yet to tap into this order block. What do I expect to happen? I expect price to dig into these lows, expand lower into this fair value gap, which aligns perfectly with this order block, and then expanding back above price action. What does this mean? This means overall I expect to see a retracement on ES this coming week. I could be completely wrong here. Now there is a contradicting factor to my analysis here. What is that? There's only one contradiction to be made. It is this one breaker. If price hits this breaker and starts to reverse upwards, forms a bullish CRT, I would be looking to take longs. Before that happens, I expect a downward movement. Why? Because we expanded into a key level. Okay? After an expansion into a key level, what did we learn? A retracement or reversal must follow suit. Okay? Now, dropping down to a 4 hour time frame, you can see price manipulated the lows here, reversed, expansion, range, expansion into a key level, and likely going to see a reversal with a change in state of delivery using this candle right here and a close below. Entry short, targeting where? These equal lows right here. Okay, so my directional bias on NQ is bearish. I'm looking for these equal lows to be hit. Sorry, ES, I said NQ. Let's take a look at the euro dollar, as I know a lot of you guys trade it. We're going to use a top-down approach here, using what we learned today. Not learned, but basically expanded on. We expanded on market profiles. On the monthly time frame, you can see price was ranging right here. Price was ranging. Retracement back into a bearish PD array. Expansion back down. Retracement back up right here. And then once more, expansion back down into what? A key level. Where is the key level? Right here. We have a fair value gap that formed. Tapping into that fair value gap, going long. Now, expansion into a key level means a reversal. That means this is a reversal and not a retracement to continue coming back down. That means I am bullish and I want prices to target these highs over here, the opposing end of the range. That is some extra stuff that I should not have told you right now, but I am not going to take it out of this video, and I'm not going to edit it out, period, point final. So what is price doing right now? Price is ranging. After a range, what will happen? Expansion. What do I expect to happen right here? Okay, I expect price, let me just draw it out. I expect price to expand upwards, potentially stopping around here, retracing back down, and expanding back up to these highs. Okay? Now this expansion is a monthly expansion. That means there will be weekly retracements in between the monthly expansion. This means you need to be very careful executing on the lower time frames. The monthly simply helps us get the directional order flow. Keep in mind, of course, this is a monthly high and can be used as a key level once price targets that high. Okay, but right now we are expanding upwards, and I do expect this high to be tapped into. Dropping down to a weekly time frame, we can see, let's just remove these drawings here. On the weekly time frame, you can see price is expanding upwards. We broke above this high, closed above it. We did not close below this candle. No change in state of delivery. We are still bullish. Why are we bullish? We have a weekly key level in the form of a fair value gap. Remember the hierarchy of key levels. Fair value gap was up there. Weekly fair value gap. Look for a daily CRT on the lower time frames. However, we have a weekly CRT. So we have confirmation once this, the previous 2 weeks candle closed inside of the range. Last week, we expected expansion to the opposing end of the range, which is exactly what I explained in the weekly analysis reports. If you missed it, please go watch it. I give you the exact DOL for the week. Now, what is likely going to happen next year? A continuation upwards. This is on the weekly time frame. That means we will have a retracement before a continuation. Okay? Now, dropping down time frames. Let me just draw the CRT high and low here. I want to explain something on the lower time frame. CRT high, CRT low. Going onto a daily time frame. What do you notice here? Price closed above the key level being the CRT high, and we are now retracing into the level. After a CRT range is filled, what usually tends to happen is something like this. So we have the CRT high, we have the CRT low, price hit the CRT low, expanded upwards, right, into the CRT, close above the CRT high. Price will usually, most of the time, always retrace back into the CRT high, into the CRT range, and then continue expanding higher. What is happening on your left here? Price is retracing into the CRT high, this high right here. You will look for a CRT entry to go long, targeting this high. So that confirms my bias. I am bullish for the coming week. However, you need to enter below the open of the weekly candle. On the daily time frame, you look for a valid key level to execute on. Now, what is this key level that you should be executing on? We have an order block right here. Order block right here. Why is this an order block? The candle took out a previous day's high, formed a fair value gap. So we formed liquidity with this candle, a bearish down close candle. Price then expanded off of that fair value gap. This is now why this becomes an order block. So simplify it. Why is this an order block? Because it generated liquidity. How did it generate liquidity? It formed a fair value gap right below it. Okay, very simple. I don't want to confuse anyone. This is an order block. What do I expect to happen? I expect price to trace into this order block this week, below the weekly open, and expand upwards, targeting these highs. Okay, very, very simple and straightforward. Okay, we're using our market profiles of expansion, retracement, etc. We now see price is consolidating. We will retrace into this order block and then expand higher. Dropping down to a 4-hour time frame, it will be a lot more visible. We have this order block right here. We can refine the order block even more. If you're on a daily time frame, let's use this square right here. Sorry, rectangle, extend it outwards. dropping down to a 4-hour time frame. You can see that this aligns with this breaker. So in this scenario, we would just use this breaker as we are refining the entry. Price has already hit the breaker. However, it hit it last week. We are waiting to enter at the right time. Time is more important than price. So we wait for the correct time. We wait for the CRT and we wait for the key level to be hit. Retracement into a key level. What happens after a retracement into a key level? An expansion is to be followed. You enter long. Okay? Very simple. That is my bias and the weekly analysis on the euro dollar. Let's actually analyze the charts some more before leaving. I know this video is already 50 minutes long and it's some heavy duty material here. I'm basically showing you how to find your key levels and so on. So let's go ahead and remove this. Remove this. Actually, you know what? Let's keep those drawn out. I'm going to show you what happens at the end of the week here. But let's just rewind the clock. Look at price action right here. We can see this right here can be used as a... Actually, you know what? Let's look at a more visually appealing range. Let's take a look at this range right here. Okay? This is what we call a dealing range. And now this is exactly what we're going to talk about next week. Why is this a dealing range? I will explain that next week. The simple way to explain it, we took out the low and we took out the high. Which high and low did we take out? The swing high and swing low. Okay, so that means this low that took out the low and the high that took out the high is the dealing range. We can delete these two lines here. And we can keep the fib up. Why are we using the fib? We want to locate the EQ, which represents the fair value, premium, and discount arrays. So any key level that forms above this red line is a premium key level. Any key level that forms below this line is a discount key level. If you are locating if you are trying to locate an entry to get long, you want to find a key level in a discount PD array. If you are trying to locate a key level to enter short, you want to find the key level in a discount PD array. Next week, we will learn exactly how to do it. In this scenario, you know, price is expanding from a key level, right? Breaking the low, expanding from a key level. What's going to happen after a high is hit? So we hit a key level here. We retrace back down on the lower time frame. Of course, this is an expansion, a reversal. So higher time frame key level hit, retracement on the higher time frame, reversal on the lower time frame. Okay, both of which lead to the downside. Very important to understand. This is almost a 90% trade win rate. You can form a model just using this profile. Now, price targets where? A key level below the midpoint of the dealing range. What is the key level that price targeted? Well, we are on the 4-hour time frame. To locate the key level, we must head over to a daily time frame. On the daily time frame, we're going to look for one here. Well, first off, we have the daily opening gap. More important, we have the order block right here. How is this order block confirmed? With a close above. Okay, so let's just square off this order block right here, dropping down to a 4-hour time frame. We can now refine it. Now, when is this order block confirmed? This order block is confirmed once price closes above here. So as you can see on the daily time frame, we extended the fib up to the high of the day, the high of Monday. Then Tuesday's price action opened, we traced below the open into a key level. Where is the key level? In a discount. You expect immediate reversal expansion back up. Okay, so let's square off Tuesday's price action and show you exactly what went on. Let's color code this in blue and drop down to a 4-hour time frame. As you can see, this was Monday's price action, creating the high of the dealing range. We then expanded lower. We retraced after an expansion, retrace into a key level in a discount. Key level is this order block right here, and then expanded back up. Very important, okay? So next week we will basically learn how to use the dealing ranges to help us understand where price is going to go. 55-minute long lecture here. I hope you guys enjoyed it. It was very educational, I guess you can say. And before we leave, I want to show you guys the dealing range right here. Price already tapped into the discount. What does that mean? That means price should be expanding to the high. Okay, that is all I'm going to leave you with for this week. Okay, there's already too much information. Some of you guys are probably very confused, and I do apologize. It is currently 7:20 p.m. on a Sunday, and I apologize for the late release of this video. However, sometimes it comes to that. I hope to see you guys next week. And if you see some people asking where is the weekly report in the private group chat, please direct them to this video and explain to them that the weekly report was done in this video. Okay, before we leave, what do I expect on the euro dollar? A move below the weekly open, retrace into a key level, expansion higher. What do I expect on ES? I expect a retracement on ES and expansion above these highs. What can also happen is, of course, a range. Okay? That's going to be it. Have a nice one. Good luck to everyone this week. I will release the schedule very soon, and the weekly analysis is in this video. Thank you. Have a nice one.